Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we'll be looking at the definition of common stock. As we do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, and then we'll go on to look at some examples and show you kind of a little more insight into what it might mean on a balance sheet or something like that. The definition for common stock is that common stock is a security which represents ownership in a corporation. Holders of common stock exercise control over the company by voting their shares to elect a board of directors and by voting on corporate policy. In the case of a company being liquidated or going bankrupt, common stockholders are on the bottom of the priority ladder. Common shareholders have rights to a company's assets only after bondholders, preferred shareholders, and other debt holders have been paid in full. For this example, we'll be looking at the balance sheet for Walmart Stores Incorporated. As you know, common stock is a form of equity in a business, so we scroll down to the last section of the balance sheet. As you know, the balance sheet is cut into three main parts, and you will notice, when we get the tools right quick, you can find right here common stock listed under the stockholders' equity, and outside that you will find a number. In any publicly traded company, you will find a number there. That number is basically what the common stock sold for based on its par value, not the total amount it's sold for, of course, just the par value. Oftentimes a company, well, most all companies have a par value. It can be any amount from a penny to $10 a share or something like that. And that's the least that a company can sell those shares for. But most times they're going to sell them for more than the par value. And so, for example, if Walmart had a par value of $10 per share, and you'll see that par value listed on the actual stock certificate, if you actually went out and bought the stock, you wouldn't be buying it for par value. So whenever the company sells new stock, it would record it on the books under the amount gained for par value. So, for example, if you had, the company turned around and sold only $342 million reported on a balance sheet, then you would know that the number there is simply par value, the total number of shares that were sold, common stock, and then divide that by par value, or multiply it by par value, and you would get this number right here. Now, of course, when the company sells them, they're selling for more than par value, so that difference there, if the par value was 10 and they sold to you for 20, the difference there would be listed under capital surplus. So that's something else we'll get to later, but right now it's just something to keep in mind, that it's only recorded based on the par value. So obviously the company's worth far, far more than this, and they've sold the shares for far more than that. But whenever you see this number, like in this case you have 342 and over here you have 352, you can do the math and see that, okay, well, they've actually have a lower number here than they had the previous year. So that tells you that from the investor's perspective that they've been buying back their own stocks. So that's good, because it actually decreases the size of the pie out there. So every person that's still holding shares, and now those shares are a larger piece of the pie. So that's a good thing whenever you see the number going down. When you see it going up, it means it simply tells you that the company is producing more shares, selling more shares, and that, of course, dilutes current shareholders. So that's not something you want to see, but it's something you have to keep an eye on. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.